Established in 1997, Uganda's Securities Exchange boasts of 24 years solid experience in operating an organized and regulated securities market since grant of its stock exchange license by the Capital Markets Authority of Uganda. The first listing on the exchange was corporate bond worth Uganda shillings 30 billion Uganda shillings issued by East Africa Development Bank within a year of opening the market. A year later, another corporate bond was listed, a 5-year bond issued by Eastern and Southern African Trade and Development Bank, PTA. In January 2000, the exchange welcomed its very first equity listing, Uganda Clays Limited. This maiden equity security listing raised Uganda shillings 1.3 billion during its initial public offer. That same year, British American Tobacco Uganda Limited floated its shares, making it the second divestiture of government-held shares in a company to take place through the exchange. The exchange pioneered the first cross-border listing in the East African region when it listed East African Breweries Limited in March 2001. A year later, the exchange welcomed its second cross-listing, the Kenya Airways, whose shares currently have blue-chip status on the Nairobi Stock Exchange. That same year, the first flotation of shares of a commercial bank occurred. Bank of Baroda offered 20% of its stocks to the public, making it the first financial institution to be listed on the exchange's main investment market segment. The IPO raised over 4 billion Uganda shillings with a 16.7% oversubscription. In 2003, the market witnessed the listing of the first medium-term note issued by Uganda Telecom. USC also launched its All-Share Index, a benchmark index for the Ugandan equity market that tracks the performance of the listed security equities. 2004, a significant milestone was achieved as the official listing of government securities commenced with a 20 billion treasury bond issued at a 20% coupon rate. Since then, over 300 government securities have been listed on the exchange. Between 2004-2009, USC was able to list various reputable companies like DFCU, Stanbic Bank, New Vision Printing and Publishing Company, NIC Holdings, and cross-list a few such as the National Media Group, Jubilee Holdings Limited, and KCB Bank. "2010 marked the dawn of a new era as USC's journey of digital transformation commenced with the automation of the Securities Central Depository. After nearly 11 years of paper share certificates, this was a first step towards achieving paperless securities transactions on the market. Currently, 99% of shares listed on the exchange are held by investors in dematerialized form. Between 2010 to 2012, the exchange would successfully implement bonus issuance by Stanbic Bank, another major cross-listing of the Centum Investment Company PLC Kenya, and welcomed the largest initial public offer yet from Umeme Limited, which attracted over 4,000 retail participants and raised approximately 171 billion Uganda shillings. Keeping its focus on the digital transformation, in 2015, USE's automated trading system was launched, marking the end of an open outcry trading system and ushering an automated market that delivered speed, accuracy, and efficiency greater than any human equivalent. This would later be complemented by the USE Easy Portal, launched as an electronic self-service portal that enables investors track their investment portfolios. Fast forward to 30th August 2017, the exchange achieved the significant milestone of demutualization. This process saw the exchange convert into a public company and most importantly, established governance structures that allowed separation of trading members' rights from their ownership rights to enhance accountability and objective market oversight. The exchange sought to maintain this momentum by unveiling a new image and in 2018 rebranded with a new vision to position itself as Uganda's preferred institution for investments and sourcing of capital through promoting safe, convenient, and sustainable investments and empowering investors through service excellence and innovation. In 2018, the exchange added to its official list the first Ugandan pharmaceutical company in Uganda, improving the diversity of the available sectors on the market. This year, USC's story has been a remarkable journey of resilience, agility, and innovation, refocusing its digital transformation journey by placing financial inclusion at the center. The exchange, through meaningful partnerships such as with MTN Momo, has championed the democratization of Uganda's stock market. This has led to exponential growth of investor in the market and the implementation of a first-of-a-kind e-IPO in the East African region. Today, the exchange celebrates another milestone that has pushed its boundaries yet again, with over $500 billion Uganda shillings raised in the market's largest initial public offering since its inception. The exchange welcomes MTN Uganda Limited.
Thank you very much. Ladies and gentlemen, thank you very much for remaining with us. You're watching Smart 24 TV, where we drive your business, and my name is Anthony. What you saw right there was the journey of USE. For over the past 25 years, close to 25 years, the company has been able to list securities on its exchange, and we are seeing that over the past 25 years, we have only about 18 listed companies, with 8 of them cross-listed mainly from Kenya. And recently, during an inauguration ceremony where we're bringing in Cheaper Technologies as a new stockbroker, Miss Miriam Ekirapa, who is a legal affairs director at CMA, said that there needs to be some amendments within the Capital Markets Authority Act if we are to see growth in the industry. From the over 130,000 investors, according to Mr. Paul Bwiso, that we have at the moment. Now, joining me today on set to talk about this is Counsel Louis Chizito, together with a legal scholar here, Counsel Ntabugahume Victor, to talk about this subject. You're most welcome, gentlemen.
Yeah, thank you.
Yes, let's start, gentlemen, with so far what the Capital Markets Authority Act involves. What does it? What is the scope of the act itself, and how far is it, of course, influencing the markets here today?
He's taking the question.
You can start, Mr. Chizito.
Okay, the Capital Markets Authority Act was introduced in Uganda in 1996. It was a reaction to, I think, what the defunct Greenland Bank was trying to do, to offer shares to the public without any law, and it created some uncertainty and problems. So they came up with a law to regularize offer of securities generally, offer of securities, offer of things like bonds, stocks, and all that. So the parameters of the Capital Markets Authority Act are that it regulates those securities law generally. Securities law, those who are going to offer shares, maybe even the corporate bonds, because I've seen there are 2 corporate bonds. If a company wants to raise money through corporate bonds. It also regulates all kinds of securities, ETFs, exchange-traded products, depository receipts. So it is intended to create certainty in the market about the regulatory framework for generally security receipts and the like. Yeah. And maybe to stem a conflict of interest among its players. Actually, the Capital Markets Authority Act regulates persons, not activities, and I think we shall get there. Yeah. Capital Markets Authority pretends to want to regulate. Okay, there are many contradictions in the law, but it regulates persons.
No.
who have been subjected to the law. Not activities per se, but we shall get to that.
Yes. Mr. Victor, according to this Capital Markets Authority Act, do you think it has done something? Do you think the CMA itself has pushed the capital markets of Uganda to some place?
Okay, thank you. So what he didn't mention also is that the Capital Markets Authority Act as well provides for some bit of investor protection by providing for the Investor Protection Fund. It also provides for some remedies, and I think it establishes the tribunal in cases where there is some bit of conflict or disputes within the market itself. And yeah, like he says, it seems to regulate more of the individuals and both persons, both natural persons and also companies, but as well it also it establishes the institution itself, the Capital Markets Authority, and I think what it misses, maybe we shall get to it, is it doesn't really regulate products within the market. And thank you.
Mr. Kizito, do you think for the past 25 years having 18 companies, 130,000 investors, has a good job been done so far?
I don't think a good job has been done, honestly. You see, the capital market is all about equities. It's not all about equities. And that's where we go wrong.
Yes, yes.
The capital markets is broad. And that is what people have been complaining about our markets, basically, is we have a narrow product range. Of course, I think in East Africa, we have the first bond-backed ETF. We have depository receipts in Uganda. But if you look at the cultural perception of the people in the market, especially even the regulators, they have not tried hard to diversify. Yes, I've been seeing them going all over the place to market collective investment schemes, which are part of the capital markets. Yeah. But yeah, you could say, okay, let me not rubbish them and say that no good job has been done. Some step has been moved, but not far enough. If we moved, I think, from 30,000 people who had USD accounts on the exchange of USE to 100,000. And why? Because of one company, MTN. So, but when you look at USE and the product offering, for people who have been here for 25 years, and let's get to the law. The law purports to regulate, there's a conflict. The law is supposed to regulate persons, but then you find a section which is saying regulated activities. Now, which activities are those that the regulator does? Because the regulator is supposed to regulate, people have submitted themselves to the law. So what if I'm offering a product? You look at me, that my conduct, am I performing well? Do I have conflict of interest? But when you go into regulating a product, you don't have the capacity. And I'm going to get to that shortly. Yeah. But back to your question, have they done a good job? Have they moved far enough? Yes, but we still have a narrow product range. So I don't know why USE doesn't open up a segment to derivatives. The other day, we have no registered derivatives. We have no commodity markets.
Mr. Kizito, they claim that our market is still young, and people may not understand the other complex products like derivatives. So they're saying that let's first have these, basic...
25 years going, 25 years after? Not really. That is just scapegoating. You see, the thing is, you cannot... Okay, we have an ETF in the market. Yes. Alltex have under the law, and their prospectors had issues in court, and that's the same issue. Their ETF is giving higher returns than the collective investment schemes in the market, because collective investment schemes, maybe the unit trusts that fall under the collective investment schemes also have returns, but they may offer you 14-11%. Alltex and the Tolia Exchange Traded Fund is offering you 18-20%. So does that argument still hold? No, it is just a lack of imagination of people at the United Securities Exchange, and maybe a bad law. That law is full of contradictions, and it is full of... Now, you see, the other thing I can tell you is the Capital Markets Authority attempted to introduce what they call IOSCO, the International Organization for Securities Commission, something of that sort. We're a signatory. It's an international securities regulation framework. IOSCO stipulates that if you are going to introduce a regulation or a law to regulate persons or a product, And those regulations are going to target capital, capital adequacy, financial requirements, and solvency. You have to demonstrate risk. You have to demonstrate that there is a risk you're going to cover for you to have that regulation. You just don't bring regulations out of the blue. If you look at the regulations that Capital Markets Authority attempted to introduce, that I think literally have been beaten down by the Ministry of Finance, the regulations under the law, they over-regulate outside the scope of the IOSCO, which they are signatory to. So that does not call for amendment. You get?
Yeah.
So one other thing. Personally, I do a lot of venture capital advisories. When you go to the Capital Markets Authority Act, and I think I've said this very many times when I come here, there's a section, they attempt to regulate products, but they shouldn't regulate products. That is, but let me go to the point. The venture capital funds world over are limited liability partnerships, world over. In Uganda, when you go to the Capital Markets Authority Act and the subsequent regulations they have made, they tell you a venture capital company. You say a venture capital fund raises money from limited partners, people within, not from the public, rarely. But here they are telling you a venture capital company. Now, which company is going to come in Uganda and be a venture capital fund as a company? Isn't that a big stumbling block? So the capital markets are beyond equities, they are beyond bonds, listed corporate bonds, they go to very many other things. And that law needs a lot of scrutiny, and I feel the law is also a hindrance to product development. Because you may find that in some areas, if you follow the IPO for MTN, another conflict of interest, let me just point out another conflict of interest that is very ripe for amendment. You see, the law says you will not offer securities to the public without a prospectus. If you follow the MTN IPO, and I read an article about this, is they charged MTN listing fees. Listing fees that if you're going to list on Uganda Securities Exchange, you have to give me, Capital Markets Authority, 1 billion. And it is in the regulations, but the regulations are illegal anyway. Because let me explain. I have just told you that Capital Markets Authority regulates persons. And Capital Markets Authority is supposed to make sure that the conduct of the market players is palatable for the market to avoid fall-offs of bad behavior, misprice, all that. Now, if you're going to create regulations in listing fees as a regulator, you are supposed to give fees. People are supposed to charge those players. Now, the issuer of a security, who is MTN, the issuer who is going to list his shares on USE is not your customer. By the way, USE is not. He's a customer of the exchange. So what business do you have charging him listing fees? And by the way, I'm going to look in the camera and tell people, Airtel, if you're going to come on the market, please don't pay the listing fees of Capital Markets Authority. They are very illegal. These are hindrances. And by the way, part of the things where I even feel the shares of USE MTN were overvalued, it's because of listing fees.
Yes.
They are priced into all that.
They haven't returned to the 200 shillings since
exactly.
the IPO.
So my argument is, and why I'm telling Airtel, the legal advisors, the transaction advisors of Airtel, known to pay the listing fees of Capital Markets Authority, is number one, they are illegal. Two, Capital Markets Authority has no business charging listing fees to a customer of an exchange. CMA can charge the players it licenses, but CMA does not regulate issuers of securities in the market. So if you're going to create listing fees for a person who's not a regulate, again, CMA regulates persons. Issuers of securities are not persons under the law.
Yes.
So what business do you have charging MTN listing fees? And I pray, and I'm not repeat this, please Airtel transaction advisors, if you're out there, do not pay the listing fees until CMA can justify them. Because under the law, you're not regulated persons. So what business do they have charging you 1 billion?
Councillor Victor here, you can come in. Of course, he has just mentioned that the CMA is not supposed to regulate the issuers, of the stock. But for you, in your own perspective, do you think that so far we are doing so good as regards our capital markets industry?
Well, I don't think we're doing so well. Of course, we can mention some bits of we can give some credit where it's due, but then 25 years down the road, a few companies listed. You just played an ad. I think it's a video where it's clear that by 2010, 10 years later, I think 2010 years later, we had about 9 equities, of which 3 were cross listings, and then the others that were, the other equities again were those which, the government of Uganda had to divest, to divest itself. These were public companies, rather national companies that were then now forced to list because
forced.
Literally, and I'm going to get to the argument I'm going to make about this entire thing. Now, Capital Markets Authority are a creature of capitalism. Okay, pull together funds and compete. For the best share of the market. Okay. Now, in developing countries like Uganda here, most companies that list on most exchanges are not market driven. Okay, they are state driven. So, for instance, MTN and Airtel at the moment, you can't tell me that they really just wanted to go to the Uganda Securities Exchange and actually list themselves. It could have been, I'm not so sure, but I have a feeling it could have been something within their licenses.
So you mean they were coerced?
Yes, it wasn't upon them to list on the Uganda Securities Exchange. And I think with the National Oil and Gas as well, the Uganda National Oil Company is going to be listed. Again, it is statutory. Okay, so it's not a product of the market. It is the CMA and the regulators saying you must list. Okay, so what happens is when you may get an oversubscription of shares and all these things, but then once you get into the market, it's going to be dull. And that's what we've been seeing across all the 25 years, because these guys are not, there's no competition to create some bit of creativity in the products that they're offering. And even when you look at companies like Umemo on the market, they seem to be monopolists. So it's not really, there's no hunger within the market to create products that are going to actually get back to the people and, raise capital and get the market to be vibrant. So now what we have, if at all we are looking at amendments, we need to understand is the CMA Act, because regulation can be institutional, it can be product based, it can be across the board all over. We need to understand, is CMA institutional? Okay, for instance, the way we have the URA within the market and all these other agencies. Okay, or is it supposed to get really into the market and look at our products? And I think I'll talk about this if at all we're to have an amendment around creation of securities that may support crypto assets and things like that. Thank you.
Well, Councillor Kizito, the argument here is that the Capital Markets Authority is doing its best, but it's still in the wrong line of action. Because if you're saying that some of the biggest companies so far we have had, at least like MTN, were coerced, then how do the other, capital markets do it? For example, in Nairobi, where we have over 65 equities, do they also come out of coercion, or there should be better means of providing incentives for companies actually to list willingly?
Your question on what the problem is and how Nairobi Securities Exchange, other exchanges do it, other regulators. It goes back to the cultural orientation of the regulator and the market players. Let me give a very good example again on the MTN IPO. And the argument I'm trying to make is the reason why we have some of these problems is of a bad law. If you followed proceedings, Mabirizi is a frivolous person, but sometimes he has a point. Mabirizi went to court and challenged certain non-disclosures, how the prospectus was offered to the public, MTN, alleging there were clerical errors, non-disclosures, and Machas court threw out the case on account of he did not have interest locus, which I found strange. There's one thing that came out. CMA, when the action, it's not even a case, when the action for judicial review was taken to court, CMA came out and said, we do not take responsibility for the issuer's prospectus. But the guys who opened, who approved the prospectus. Now, if you are to go to court, why would you not take CMA to court for approving that prospectus? Ordinarily, in other markets like the US, the responsibility to approve a prospectus is with the exchange
Not the authority.
The authority comes in, Mabilizi, now our Mabilizi of the US could go to the exchange and say the issuer of this security did not disclose A, B, C, and D, and F. Because now there's a conflict of interest. If Capital Markets Authority approves the prospectus, why do you have to go to the same authority and tell them regularize when you're the guys who have approved that security, the prospectus for that security? So there's a conflict of interest. The law says, one, you will not offer security to the
So
public.
it's like we are reporting to the culprit. Is that
So
what it is?
literally you're left with only an option of judicial review. And judicial review, court processes sometimes take time.
Yeah.
Sometimes the judges may not be technical in this area
Yeah,
to give a
exactly.
good judgment.
Yes.
Sometimes. So it is best that the Capital Markets Authority is detached from approving offered documents. When you read the law, I think section 92G, it states that, that's the only section that I remember, it states that it is the responsibility of the exchange to give you a certificate of compliance and scrutinize the prospectus. If me, the exchange, you're MTN, you have come to me and you're going to list a security on my exchange, and I have scrutinized the prospectus and I've issued you with a certificate of compliance, what is Capital Markets Authority doing approving that same prospectus? Because now they're creating problems for themselves. When you sanction this prospectus, it leaves me, the complainant, with one option: to take you to court and get damages for both negligence and a bad work done. MTN and the issuer and the transaction advisor may be exonerated, because at that point, you as the regulator, you have taken responsibility. Whatever is offered is authentic. So, getting back to your question, what have we done wrong? That is an area. I don't see why exchanges. You see, the product range we have in Uganda, the narrow product range, is again back to the prospectus question. You find that CMA can take years, months, even sometimes years, to approve a prospectus as the issuer is waiting. And that distorts the ability for creativeness. Number two, when you look at the Capital Markets Authority Act and why it's destroying, why it's not doing what the Kenyans are doing. Kenya is a different market. First of all, Kenya is 3 times the size. So they have a bigger middle class to even fit into them capital markets and give liquidity. In Uganda, you only have 10,000. If you got to go by the statistics of the USE, you have 10,000, 100,000 people have opened up SCD accounts to trade. And having that in mind, and the narrow product range and the slow growth of the markets, you need regulators who are very proactive. I like what they have done with the collective investment schemes, by the way. I saw the report, I read their report that they released on now, which they should have released last month anyway, for the second quarter, I think the second quarter. They said that collective investment schemes grew in 3 months.
Yes.
And they're growing.
Yeah,
and
growing.
why are collective investment schemes growing? Awareness, by the way. They have gone out of their way. Okay, much as I don't like Capital Markets Authority, they've really gone out of their way to go to radio stations, to go to TV stations and tell people, hey, there is this. But even the players in the market are alive to the fact that we need to mobilize savings, we need to mobilize. But again, there's a problem again. Now, again, the collective investment schemes are growing as they are growing. And the law is very clear that they are tax exempt. CMA is conjuring up mysterious ways on how to squeeze the little taxes they can get out of collective investment schemes.
Do you think about that, Victor? The taxation, the bonds, I know they have a withholding tax of about 20%. I think collective investment schemes are the only asset so far in the capital markets that is not taxed. Do you think also this has some bit of influence?
Yes, of course. Taxation, you know, in taxation law, we know that tax is a creature of statute. Yes. Okay. The reason as to why it is made as such is taxation is supposed to help an economy as well grow. Now, if at all you're looking at collective investment schemes, which are some of the probably could be the next drivers of the market, and then you want to squeeze taxes within them, then while you're promoting them at a certain level, you're also now squeezing them out, outside the market. Now, when you look at some of the tax exemptions that are within the market, for instance, you have, I think, Section 30 of the taxation, rather the Section 30 of the Income Tax Act, which says that the monies you spend when you're listing and IPOs, you're supposed to deduct them in across of, I think, 25% per year to make 4 years so that you can return your money. That's an incentive so that people can actually get, they are willing to now come into the market. Okay, so tax exemptions are really incentives that you should actually use so that the market can grow. So where you're looking at collective investment schemes, and I think the president said something about it recently, how people should, get money together and and then you want to squeeze again taxes within these people. At the end of, yes, you're promoting something, but again you're fracturing it at the base.
Ladies and gentlemen, we are still talking about the Capital Markets Authority Act. Should it be amended? Are there some things that we need to change so as we have the growth of our markets here in Uganda? We are going to take a quick breather. We return with the final segment on what is the way forward, what should we look up to, and what exactly should be changed in this act. Stay with us. We'll be right back.